In our next guest, Erin Gibbs, CIO, Gibbs Wealth Management. Thank you for being here. I know you have some stock picks you're managing within all the volatility to say there are still some opportunities. Is that right?
That's right. So even though we've had these downturns, there are some defensive stocks that have been holding up well and even profiting on certain days, even with the headlines around these tariffs. So I think the big thing is that we're seeing overall risk off trading. So we're seeing flight to quality, we're seeing basically flight to bonds, higher credit spreads in the lower rated bonds, just as your previous guest mentioned, flight to gold, and certainly a flight away from the riskier stocks. But this does mean that there are opportunities, particularly within the defensive stocks and those that can handle a potential recession or slowdown in GDP growth. And two of those areas that I really specifically like right now are healthcare and staples. And so those are areas where,
right?
Yes, I know, not the most exciting area, but one of my favorites is Walmart. Another stock that's just done really well, has very strong cash flow. So can weather a recession. It's actually the largest grocery retailer in the country. So we're always going to be going back to Walmart, and they always figure out ways to sell even more and expand their exposure. And so, and a very good analyst rating, and not terribly expensive. So that's one of my favorites in defensives that has been doing well, even in the face of tariffs. And another stock that I really like is McKesson, and this is healthcare. Exceptionally strong free cash flow to capital expenditures. So they're really able to have strong cash flows and reinvest that and grow their business organically, as well as strong analyst ratings and good valuations. So I think these are the type of defensive stocks that even if we feel some bumps along the road this next year as we suddenly face this contraction in fiscal spending, and we're unsure of where the growth might come from this year, these are companies that are able to deliver growth, deliver profitability quarter after quarter, and maybe just help you sleep a little better over the next 2 quarters.
Yeah. All right, so names like McKesson and also Walmart in healthcare and staples. It's interesting because you are saying sell into the rallies because you are a bit nervous, right, at this point. So you're picking defensive plays, but when you think about the market conditions, and could those persist? I mean, for example, this is looking like this could be the worst week of the year for the S&P 500, despite the fact that we have an up arrow at this moment.
Absolutely. And I'm saying, I think this is a new mentality. For so many years, we've had the buy the dip type of mentality. And it really does look like it's going to be sell into the rallies. And so those days that we do see up cycles, I think those are opportunities to take profits in your riskier stocks. And so I'm talking more about an overall rotation. I'm not saying necessarily completely sell out of all your equities completely, but certainly if you have those profits, particularly in those highly valued price per perfection growth stocks, those are the areas where I want to say take the profits. And if you are considering just simply rebalancing, looking at your defensive repositioning here, I think another important thing also is if you are exposed to some of the emerging markets, I know they've been very popular, particularly Latin America, Argentina. I think those areas are again, also very risky. I think that though they've looked popular for a few days here and there, I don't think they have the underlying stability and overall organic growth within their system, their structural issues. And so that's another area that I'd say sell on the rally days.
So when you talk about abroad, I mean, there's been some inflows into Europe, for example. You were talking about emerging markets, and I've seen interest in China, for example. I mean, when you talk about abroad, could you just get into that a little more? Where do you see the strength exactly?
So right now, again, we've had incredible strength within Latin America. I think that's going to be played out soon enough. I think we have seen, as you just mentioned, a lot of interest in Europe, and particularly within Germany, as they're making some, or at least announcing that they're going to make some big fiscal changes when it comes to spending. However, they're not making enough changes when it comes to making companies be able to be more profitable quickly and easily. I mean, it really would take such a massive revamping of the legal, the regulations, that sort of type of issues to really create the kind of GDP growth and profitability growth that you would want in Europe versus the United States, even with the backdrop of, you know, the uncertainty that we have in the United States. So I would say I'm not ready to jump into Europe just yet. I don't think we're going to see the dollar weaken so much that suddenly Europe is going to be extraordinarily outperforming for the year. And I'd rather still have an overweight within the US.
Right. And just quickly on bonds, on U.S. bonds, you think fixed income has a place in a portfolio right now. What kind of bonds are you looking at specifically? What could work there?
Sure. So right now it's about the high quality. So we're talking US Treasuries and triple, investment grade only. I'm not looking at taking additional risks in sort of the lower rated junk bonds. Like I said, one of the things that the warning signs that we've seen of that this risk off trade might be a little more persistent. This week might not just be the only week that this is going to happen, is that we've seen the triple B credit spreads really increase. So we're just seeing a massive ask of premiums for holding those riskier bonds, and that's not a good sign. And that can frequently be basically a precursor to a recession. So that's not something where I'm saying, let's go and jump into the riskier stuff. Stick with your US Treasuries if you really wanted that flight to safety trade.
All right. Erin Gibbs of Gibbs Wealth Management. Thank you so much. It's great to see you. Appreciate it. Thanks for being here.